What's up guys, welcome back to Money Grow, the channel all about making your money grow. This is the 11th episode of my 100k wheel strategy portfolio. I'm filming this video on Thursday, December 3rd, after the market closed, so it's now been 73 days since I started trading in this account on September 21st, 2020. My net account value, if I were to liquidate my account today and buy back all my open positions, is $104,658. And the cash balance of the account, which counts all the cash collateral I used to open my positions, plus any cash I receive from premiums, is currently at $107,170. I made a total of 6 trades since my last episode, and I'm excited to share the updates with you guys. Before we continue, I just want to give a quick shout out to my amazing Patreon supporters. We have our Crow CEO, Jorge Ledesma, and our 4 Crow investors, Prismatic, Erica, Andrew Paz, and John Harden. Thank you all so much for your continued support. If you guys are new to the channel, this is my Patreon page where I post every single time I make a trade in my $100,000 portfolio. If you support the channel on there as a level 8 or higher supporter, you'll always be notified whenever I make a trade, and you'll be the first to see those updates. So you're able to follow my trades and even copy them if you wanted to. But of course, always do your own research and never just blindly follow what someone else is doing. So if that's something that interests you, I'll have my link to my Patreon in the description below. Another easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks and free cash. For a limited time, Webull is giving away 4 free stocks, M1 Finance is giving away $10 in cash, and Robinhood is giving away free stock like Apple or Facebook or many others when you sign up. Links are all in the description. Thank you guys. Let's jump back into my portfolio. I started this account 73 days ago with a clean 100k balance, and you can see I now have a cash balance of $107,170. This excess amount that you see is all premium that I collected from running the wheel option selling strategy. If you don't know what that is, please watch my explanation video. I'll attach a card right here so you can click and watch. On the screen now is my spreadsheet that my friend helped make for me, which helps me track a ton of useful information. As always, I'll leave it on the screen for a few seconds, but please feel free to pause the video if you'd like to look at it more thoroughly. I've left a download link in the description so you can download the basic template of this spreadsheet and use it for yourself. Don't worry, that one's completely free, but if you want access to this exact version that you're seeing on the screen now, I update it regularly after making trades, and I'm granting viewing access to all my level 8 and up Patreon supporters. So again, if that's something that interests you, my link is in the description. Thank you. This is the front page of my Webull account where you can see all my open positions. I currently have a liquid cash balance of $14,420, which means I'm using $92,750 of my available cash balance as collateral, which is 86.54% of my total cash. I like having an average utilization rate above 90%, so I'm always looking for new puts to sell and definitely have my eyes on a few stocks for next week. As you guys may have noticed, I'm becoming a little more aggressive with my strike prices for new contracts that I'm opening. My reasoning for this is that I'd actually like to be assigned some shares for the first time in this account, and I also want to boost the overall gains in the account. But like I've explained before, I don't like selling in the money puts because that's a bit too risky for me, and it's too bullish of a position for such a hot market like this. But I am targeting closer to 30 delta and relatively high annualized percentage returns on most of my new plays. If you guys enjoy this type of content, I would really appreciate it if you like the video and subscribe to the channel. It's completely free and it really helps me out. Thank you guys very much. Let's continue where we left off from the last episode. We're now on update number 74 from my Patreon updates. Exxon Mobil. On the day I sold these contracts, Exxon Mobil was having a red day, so it inflated premiums a bit in my favor. I took advantage of that to sell 3 puts for $336 total premium. Even though Exxon Mobil is up about 17% over the past month, it's still so undervalued to me, being down 40% over the past year and 50% over the past 5 years. That's just crazy to me. Because of their relatively low share price, their dividend yield has been inflated massively to about 9%. And according to the CEO, they're very focused on maintaining that dividend, so even if I get stuck with shares, I'll be happy to receive that dividend, and honestly probably expect decent price appreciation as well. If you guys are new to the series, I try to avoid getting repetitive with my analysis of stocks that I've already covered before on the channel. So rather than deeply analyzing the same stocks multiple times, instead, I'll point you guys to the episode where I explain my thought process for choosing the stock, which also includes an analysis of the financials of the company. For Exxon Mobil, that would be episode 3. Update 75 is AT&T. In update 68, I sold to open one put for $32 premium. I was able to buy to close it for $15 after holding for 12 days. Similar to Exxon Mobil, AT&T is extremely undervalued in my opinion. And same with Exxon Mobil, they have an enormous dividend yield of about 7%. Since I have some unused capital and since a few of my contracts are currently at over 50% profit, I might close out some more contracts and look into selling some puts on AT&T. This could very well happen next week unless I see a more attractive opportunity. I explain my thought process for choosing AT&T and analyze their financials in episode 3. Update 76 is Realty Income. In update 65, where I sold 2 puts for $185 each, I mentioned that I would be fine selling another one if I could get over $195 premium. I was able to get $225 premium for this contract, which was more than I wanted. Realty Income is currently my favorite stock to sell puts on because I feel like it's one of the most undervalued picks from my entire watch list. So I really don't mind not giving myself any significant downside buffer with this play. I might even look into selling one more put on them, which would bring my total position up to 4 puts, which would require about $24,000 in cash collateral. Since I do like to keep the maximum size of any one position to 25% of my cash balance, that would be roughly $26,800, still below that maximum threshold. The reason I place that limit on myself is just so I don't become overexposed to one specific company, which could be devastating for the portfolio if that stock were to crash. Being more diversified is a much better strategy for my goals. I explain my thought process for choosing Realty Income and analyze their financials in episode 3. Update 77 is CVS Pharmacy. I took advantage of their 3% pop in price on December 2nd to close out my contracts. In update 66, I sold to open 2 puts for $147 each, $294 total premium. I was able to buy to close both for $50 each, $100 total, after holding for 15 days. Unfortunately, today on December 3rd, they went up another 4%, but oh well, as the saying goes, nobody ever went broke by locking in profits. Also, I try to be more mathematically focused with my trades rather than emotionally involved, so I'll just focus on the fact that I made a nice profit on this one, and now it's on to the next one. I explain my thought process for choosing CVS and analyze their financials in episode 9. Update 78 is BYND Beyond Meat. Yes, you heard that correct. Beyond Meat makes a return in the portfolio, even after their huge run-up in price, and this time it's at a much higher strike price. If you guys remember from last time, my strike price was a measly $108, and surprisingly, that was actually at 0.30 delta. But I did get rewarded for the extra risk I took this time with much more premium, a really nice $725 payment for selling this contract. Again, I do want to reiterate that this is a much riskier play, especially because of the aggressive strike price, but also because Beyond Meat is not what's considered a safe, blue chip company. Rather, they're a relatively new stock who recently IPO'd, and they're trying to disrupt an established industry. Although they have a long way to go with plenty of competition requiring them to be smart and innovative with each one of their future moves, I remain very bullish on this stock, so we'll see how this turns out. I did want to share this with you guys though. In a recent article put out by The Motley Fool, they explain how a company named Eat just received government approval to sell lab-grown cultured meat in Singapore. Although Beyond Meat doesn't directly benefit from this, it's a huge piece of news for them since this can very well pave the way for them going forward. Eat Just is also currently in talks with American regulators to get approval for selling this lab-grown chicken in America as well. which would be huge for all plant-based meat companies. And since Beyond Meat and Impossible Foods don't view other plant-based companies as their primary competitors, this is more of a team effort to get the industry as a whole to the next step where all plant-based manufacturers can benefit. That's really exciting stuff. I honestly wouldn't mind getting assigned these shares and holding them for the long term while also selling far out of the money calls. I explain my thought process for choosing Beyond Meat and analyze their financials in episode 9. Update 79 is DIS Disney. I took advantage of their 2.74% pop in price on December 2nd to close out my contract. In update 67, I sold to open one put for $335 premium. I was able to buy to close it for $103 after holding for 14 days. Disney remains on the top 5 list of my favorite stocks just based on their value and their potential. And this is even after considering their run up in price, so I'll definitely be looking for another put to sell on them soon. I explain my thought process for choosing Disney and analyze their financials in episode 3. So those were all 6 trades I made since last episode. Subscribe and stay tuned for next Friday's episode. I hope you guys enjoyed my 11th portfolio update with a bunch of great trades. If you have any comments, questions, or suggestions, please comment down below. I will be reading all of them. Be the first to see all of my trades on Patreon and get your free stocks in the description below. Thank you guys so much for watching until the very end. I hope you'll be back for future videos, and as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.